Welcome back to the FlipNerd.com REI Classroom, where experts from across the real estate investing industry teach you quick lessons to take your business to the next level. And now, let's meet today's expert host.
Hi everyone, this is Lex Levinrad with the Distressed Real Estate Institute, and I've got another lesson for you guys on REI Classroom. And today we're going to be talking about managing rental properties and cash flow.
If you're an active real estate investor already doing deals and looking to double or triple your business, you should consider joining the Investor Fuel Real Estate Investor Mastermind. We're a small group of investors that share our best practices, tips, and tricks with one another in an effort to all win. We limit our membership to only 1 to 2 members per market, so everyone shares their knowledge, tips, and tricks openly and honestly. Our members include some buying 1 to 2 houses a month, up to some of the most respected investors and leaders in the real estate investing industry, some of which have personally done over 1,000 deals. If you'd like to be considered for our invitation-only world-class mastermind, please visit investorfuel.com to request your personal invitation. Our next meeting is coming up quickly. Go to investorfuel.com now to learn more.
Okay, so on previous lessons we spoke about the advantages of buying rental properties long term. But what I want to do today is I want to cover with you, first of all, how to manage your rental properties, and also the details of the cash flow and how you break that down. So a couple of rule of thumb things that's good to have. Make sure you got a notepad and pen handy. Write these down. First of all, for cash flow, there's an old rule of thumb that's called the 100 times rent rule, which says that if you're buying a property for more than 100 times rent, it's going to be expensive. If you're buying it for less than 100 times rent, it's going to be cheap. So if a house rents for $1,000 a month, 100 times rent would be $100,000. So if you could buy a house, let's say for $50,000, that rented for $1,000 a month, you'd be buying it at 50 times rent and would be a screaming bargain. And if you come across something like that, make sure you give me a call. Now, in the previous peak, let's say in 2007, we saw prices go up to 200 times rent, even 250, which is very, very overvalued. So you can keep yourself, as a good rule of thumb, stay under the 100 times rent, try and buy properties for no more than 100 times rent, and you should cash flow, okay? Now, another rule of thumb that's good to have is what's called the annual gross income. And what you do is you simply take the monthly rent, multiply by 12, and then divide that into your purchase price. So let's say a property rents for $800 a month, okay? And you multiply that by 12, it's $9,600. If you bought that property for $96,000, then you would be earning 10% on your money, assuming you purchased the property for cash and without factoring in taxes and insurance. Okay, so that's called annual gross income. In certain markets right now in the United States, there's a very high as 25% annual gross income in certain cities. A lot of cities are known as good rental areas, for example, Cleveland and certain cities in Texas and Tampa, Atlanta. We're located in Florida. We have right here in the counties we live in 12, 13%, 15%. I routinely buy properties with annual gross income about an hour north of me of 20, 25, even 30% sometimes. So if you look out there, there are bargains, okay? Now, while we're talking about rental property, your component, okay? We're talking about rental income. So let's say rental income is $800 a month. You need to look at on your payment. Your mortgage payment has basically got 4 components to it. Okay, it's got principal, interest, taxes, and insurance. Now, if you use something like a hard money loan to get into your property initially, then you might not have any principal payment. You might just have interest, taxes, and insurance. Okay, but once you get some kind of long-term financing in place, if you refinance, then you'll have principal, interest, taxes, and insurance. So interest payment is simply what it is. If you're borrowing money from someone, you're paying them 10%, that's your interest payment. If you've got a long-term mortgage in place and your mortgage is at 5%, let's say on a conventional refinance, then that's your interest rate. Principal is simply how much you're paying towards your principal, and that's reducing your debt payment, right? Taxes is a fixed thing. You can pull up on the tax assessor's website in any city or county in this country. And insurance is also a fixed thing. You can call any insurance agent that specializes in properties and figure out what your insurance costs are. So if you take your gross rental income, let's say $1,000 a month, And then you take your mortgage payment, and let's say your mortgage payment is $1,000 a month. Add to your payment the taxes and the insurance, so you figure out what your net is. Okay, and once you have your net, you can see how much cash flow you have. And typically, a good rule of thumb is you need to buy properties with positive cash flow. And when I'm saying positive cash flow, I don't just mean like $50 or $100, because things break. When you have a rental property, you have things that you need to repair. If you want to be super conservative, this is a very conservative assumption, but I like to assume that out of every 12 months of rent, you'll lose 1 month to a vacancy, meaning a tenant moving out and replacing with a new tenant, and you'll lose another month to repairs, meaning a house that rents for $1,000 a month, somewhere during that year, you could spend as much as $1,000 in repairs. On average, if you look at a bunch of different houses, what you'll see is some have repairs of less, 200-300, but other have bigger repairs, maybe an AC system or something that goes that's a little bit more. Okay, so that's a good conservative rule of thumb. Now, the final thing to note is with rental properties, you've got to treat it like a business. Okay, so if a guy owes you rent or a lady owes you rent and they don't pay on time, you have to have them move out and find another tenant. Different states have different laws. Some states are landlord-friendly states and other states are tenant-friendly states. So if you're thinking about being a landlord, clearly it's beneficial to do it in landlord-friendly states where it's easier to evict a tenant and put a new tenant in. Okay, so just remember, with rental properties, focus on positive cash flow. Property has to have rental income greater than your expenses, and not just $50 or $100, but more than that. And remember to take all the benefits, the tax advantages, depreciation, appreciation, etc., into consideration. Okay, so once again, this is Lex Levinrad with the Distressed Real Estate Institute. Thanks for watching today's REI classroom.
If you're an active real estate investor already doing deals and looking to double or triple your business, you should consider joining the Investor Fuel Real Estate Investor Mastermind. We're a small group of investors that share our best practices, tips, and tricks with one another in an effort to all win. Real estate investing can be a lonely business for successful real estate investors, but it doesn't have to be. Investor Fuel members meet 4 times a year, but we talk to each other 365 days a year, and we focus on improving the profitability of our businesses, improving the quality of our lives. That's why we do this, right? And making an impact on those around us so we can truly leave a legacy. We limit our membership to only 1 to 2 members per market, so everyone shares their knowledge, tips, and tricks openly and honestly. Our members include some buying 1 to 2 houses a month, up to some of the most respected investors and leaders in the real estate investing industry, some of which have personally done over 1,000 deals. If you'd like to be considered for our invitation-only world-class mastermind, please visit investorfuel.com to request your personal invitation. Our next meeting is coming up quickly. Go to investorfuel.com now to learn more. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of flipnerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Are you a member yet of flipnerd.com, the hottest real estate investing social community online? If not, you can join for free in less than 30 seconds and get access to hundreds of off-market deals, vendors in your market to help you in your business, and you can start networking with thousands of other investors just like you. Get your free account now at flipnerd.com. Please check out the Flipnerd family of real estate investing shows, where you can access hundreds of expert interviews, quick tips, and lessons from leaders across the real estate investing industry. They're available at flipnerd.com/shows, or simply search for Flipnerd in the iTunes Store.